What's going on, y'all? Welcome back to the channel. Thanks for joining me on a little nature hike right now. Just getting outside. It's beautiful weather here in the Nashville, Tennessee area. And right now, just reflecting on, for those that are interested in not getting rich. I don't want to talk about getting rich. I want to talk about building wealth. This is something that I don't know if you want to say obsessed with, but something that I really have focused on and really just in reflection mode. And just going back to my journey, for those that are new to the channel, one, be sure to like, subscribe, all that fun stuff. But for those that don't know who I am, my name is Jeff Rose. I'm a certified financial planner. I had a wealth management firm. But even more than that, before, when I was younger, my parents both filed bankruptcy, not once, but twice. I grew up in a house that my dad couldn't even pay for it himself, had to borrow money from his ex-wife, my mom, to buy a house for $8,000. So this is what I grew up with. This is what I was exposed to. So I didn't know anything about investing. I didn't know anything about building wealth. I drove a 96 Geo Storm. I'm sorry, my dad did. I drove that in high school. So this was my upbringing. So to have that, and then to actually achieve, multi-millionaire status, to all my successes, all my accomplishments, really just comes down to two things. When I think about the types of investments that you need to make to build wealth, not to get rich, but to build wealth. And when I look at these two different types of assets, I just want to break them down for you right now. The first are tangible assets. And these are tangible assets that you are probably more familiar with, and that would be investing into stocks. That could be investing into mutual funds. That could be investing into ETFs, in your 401ks, your Roth IRAs. So tangible assets, yes, typically things that you can touch, but financial assets, you have your statements, you can log into your bank accounts, your online accounts. So these are your more traditional assets. And for me in the beginning, once again, my parents didn't really know anything about investing. I don't think my dad had any investments at all. He actually passed away with a negative net worth. So for me, investing into tangible assets, it was foreign to me. And luckily I went to school, majored in finance, started learning a little bit about investing. And it wasn't until I had an internship at a investment brokerage firm where I finally started investing for the very first time. And this is before the Robin Hoods and the M1 Finances of the world. So you had to open up an old school brokerage account, do all the paper statements, or all the forms and all that stuff. But I was still broke. I was in college. Yes, I was working part-time. Didn't have a ton of money, but I still started investing $25 a month into a so-so mutual fund. I don't even think the mutual fund even exists anymore. But what that did was it started showing me that I can do it, right? I started making a priority to start saving. I still didn't quite fully grasp the power of compounding interest back then, but I started to. Because for those that have started investing, you've seen this, right? You start investing $25, $50, even $100 a month. In the first couple months, even couple years, you don't see a lot of growth. It takes time. You make 20% on a $100 investment, woohoo, you just made 20 bucks. So it takes time for that compounding interest. But when you've been investing for a while, and now you've got 1,000, 10,000, 100,000, and you make that 20% return, well, now you just made 20 grand in a year. So that's the power of compounding interest. Those are the tangible assets. For anybody that's, not even sure where to start, I would encourage you, follow my lead, where I didn't really know what I was doing. So I bought a mutual fund. You can buy mutual funds, you can buy ETFs, so that you aren't really in charge. Yes, you have to pick that fund or that ETF, but you have an investment manager that is in charge of making all that selections. Buying ETF, you're going to have anywhere from 50 on up to 500 individual companies where you're just buying little micro shares. So you don't have a whole ton of risk, but then just through that process, you start to learn a lot. Because when I signed up for my account, started investing in this mutual fund, I'm getting all the prospectuses in the mail. I'm getting all that literature. And I was a student of finance, right? A student of investing. So I wanted to learn. So I'm reading some of it, not all of it. But then all of a sudden, like now I'm getting exposed to information in an industry that I had no prior knowledge about. So that forced me to that curiosity to want to learn more about, okay, I'm investing into this mutual fund. What other mutual funds are out there? What other investments are out there that I don't even know about? So just this raging curiosity of wanting to understand investing and how the other people were doing it, the wealthy people, the rich people, how they were investing. So those are your tangible assets. Now the other one that I'm probably even more excited about is the intangible. And these are assets that you can't touch. And for me, like sometimes when people hear intangible assets, they think copyrights, patents, things like that. And that also could be an investment that you could make that could make you a gazillions of dollars. That wasn't my path. So when I think of intangible investments for me, it was essentially, how do I invest in myself? And I know like this is one of those expressions, these phrases that you hear a lot that can be very cliche. Oh, invest in yourself. And it was one of those things I heard. I heard other people talking about it, but I didn't truly understand. And when it started to make sense to me, when I started to see, oh, this is what that looks like, I'll kind of just share some of my experience of how investing in myself really led to some of the biggest returns I've seen. Because to make 10% in the stock market, the S&P 500 has averaged about 10%, since its inception, since the beginning, which is phenomenal. But then I look at ways that I have invested in myself and seeing how and it's a little bit harder to track the rate of return on investing in yourself, but I can see based off how much I was making here, and then after doing certain things, after investing in myself in certain ways, to see how much I'm making here, like that is a much larger rate of return that has continued to produce over the last decade plus. So one of the ways that you can invest in yourself is accelerated learning. This could be education. It could be signing up to an online class. It could be buying a book. It could be listening to a podcast, buying a course. I think that is one of the most underrated ways that people really dismiss. I think we live in this day and age where, especially here on YouTube, and I see this in the comments, I see this all the time. Like I even see creators, like leading in with, oh, I'm not trying to sell you anything. I'm just trying to give you information. Okay, they are selling you something. They're selling you themselves. They might not want you to buy anything, but they want you to watch their videos. They want you to watch the videos so they can earn money from the ads. Like I have, maybe that's a whole other video I need to do, because they're trying to sell you on who they are, their brand, what they're talking about. So everyone's trying to sell you something. Don't ever believe that is not the case. But just investing into your education, going back to courses. Man, I have bought tons of courses over my lifetime because there have been certain things that I wanted to learn at a much faster rate. Now, there was a time back in the beginning where I didn't have the money to, I probably had the money if I'm being honest, but I was too scared to spend $100, $200 on a course because I was like, man, I don't know this person. Is it a waste of time? And there also was like this pride, ego part of me that wanted to figure it out myself. Like, no, I'm gonna roll up my sleeves. I'm gonna get the work done. But then over time, when I realized, man, when there are very specific things that I don't know, and sure, I could try to figure it out on my own, or I could spend $97 on a course that I can learn from this other person's experience in a much faster clip of time that's hopefully going to yield so much more. And just to give a very specific example, this is going back when I first launched the YouTube channel many years ago. Like, I was trying to figure it out on my own, ended up buying this YouTube course, and it was like $97. And I learned so much in that course because I didn't know anything about cameras, I didn't know anything about thumbnails, I didn't know anything about subscriber retention or viewer retention. There's just all these things about YouTube that I didn't know. And for $97, I learned so much in like 30 days that it would have taken me a couple years to figure out. So that was just one way, once again, just accelerating that learning curve. That when you gotta value your time. Like, you have to value your time. Your time is precious. You can't get it back. It's your most precious asset. So that is one way. Another way, how I invested into myself and how you can invest into yourself, is investing into your brand. And this is, you can go a lot of different directions depending on what industry you're in. But I started thinking about one example for me. When I first started in the business as being a financial planner, I was young. You see the white hairs now. You see all these white hairs now. Okay, back in the day when I was much younger, I was this 28-year-old, not fresh out of college. I did have military experience, so I had some of that, but I still had many people. So most of the people that I was trying to get as clients were retirees or soon to be retirees, baby boomers. So here I am, this young man who at the time doesn't even have I think we were pregnant with our first child. I wasn't pregnant, my wife was pregnant with our first child, but a lot of these baby boomers were like, oh, are you the right guy to manage my money, my nest egg? This is my entire life savings that I have been saving for the last 30 plus years, and I'm gonna give it to you. So I had to overcome that obstacle of like proving to these people that I had the experience, like I was the right guy. And one of the ways that I invested into my brand of showing that I am that guy, that I have the experience, was I ended up getting what is called the CFP, the Certified Financial Planner designation. In the financial services industry, this is not a designation that you have to get. It's I always compare it to an accountant. An accountant, you can just be a tax preparer, right? You can have an accounting degree. You don't have to become a CPA. Same thing in our industry. I didn't have to become a CFP, but it was something that I felt I needed to accelerate the learning, because I learned so much about investing and financial planning and estate planning. This was like a year, and I did a fast track program. I did accelerated learning on that as well. So, some people, it takes them 3 years to get it. I did it in less than a year. But also, after going through all that, getting the designation, after I passed the test, now I had these credentials. Like, I had the alphabet soup behind my name, which also, one, it accelerated my learning, but also two, it elevated my brand, because now I'm just not just another financial planner. I am a certified financial planner. And whenever I used to live back in Illinois at that time, within like a 45-mile radius, there were, I think, only 3 to 4 other CFPs. So it was a way to really separate myself from the competition. And that was just another example of a intangible asset, investing into myself. I can't touch the CFP designation, but I had the experience, I have the credentials, I had all that to back me up. And then finally, one of the other biggest investments that I made, which truly, looking back, was life-changing, and that was investing into a business coaching program. And I've also done one-on-one consulting, one-on-one coaching. I've done mastermind groups, and we can talk about that on another video. But this business coaching program, like, I was already doing very well. I was already making $250 a year, which living in a small town back then, like that was a ton of money. But I knew like there was something more. So I ended up investing into this coaching program that was not cheap. Even back then, like it was a lot of money because I'd never had invested that amount before in my life. And it was around, I think, 8 or 9 grand for the year. And it was one of these things where you talk about being intangible. So this investment, I would go up to one of their offices up in the Chicago area. I go up 4 times a year, once a quarter. We have a day session. I had one call with the program manager, like in between each session. I got a binder full of materials. And I mean, that was it. But what I also got was a program that completely changed my mindset. It completely changed the way that I approach not just my business, but also my personal life. And it took a while. Like, once again, like I already had a lot of that inner drive that many entrepreneurs, high achievers have. But like there was a lot of it was just by pure grunt work, right? I mean, just like pushing the issue, like just working. I'm just gonna outwork it. I'm gonna outwork it. And I just got to the point where, okay, I want to work smarter now. I don't want to work harder. I want to work smarter. And essentially that's what this coaching program showed me. So through this journey of investing into this intangible asset, I went from making $250,000 a year, within 3 years making almost $750,000, like 3x my revenue. In 3x my revenue in 3 years, all from a $9,000 investment. So you do like the ROI, right? Like that is not, I invested $9,000 and now I'm making 500,000, or it grew into 500,000 one time. It was a recurring, and that revenue continued to grow and to grow. And that is where finally just really seeing it for what it was, right? Like that investment into that coaching program, which was by far one of the highest ROIs on any of my intangible assets I've invested into. That's what it has allowed me to truly appreciate and understand this is what it's like to build wealth. Like this is what it feels like. This is what it smells like. And that's why it's a work day. And I'm out here on a hike recording this video for you, because I want you to understand, like there are so many different ways that you can invest into yourself. And if you truly want to build wealth, it's understanding there are different types of assets that you can invest to. There are different types of investments that you can invest to. Pick and choose wisely. We only have so much time on this earth to make an impact on the people that we love. And by doing so and just starting those baby steps, going back to, this all started because I started investing $25 a month into a crappy mutual fund, into that tangible asset that I kind of understood. And just by taking that action, it led into me investing into other things, other assets, ones I could touch, get a statement for, others like the CFP designation, like the coaching program, like the mastermind programs. Those are the things that, looking back, once again, it's harder to measure, but man, when you kind of just like sit back and just kind of pinch yourself and realize, wow, that's where I was. Like that's where I was, and this is where I am now. That's some good stuff. All right, y'all, hope you enjoyed this video. I'm gonna have more content like this for you. If you haven't yet, be sure to like, subscribe, all that good stuff. And if you have a comment or a question, or if you have a question, leave a comment. I'd love to hear what you're working on, where you're stuck, where I can maybe give you a nudge in that right direction to help you begin that step towards building true wealth. All right, y'all. Till next time, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Until then, peace.